4. But the major average is still ending on a bit of a choppy note for the week as the S&P and NASDAQ were pulled lower. Disappointing earnings from Meta and Microsoft. There you see week to date in real time. Here to discuss it all and more, Keith Lerner, Co-Chief Investment Officer at Truist Wealth. Keith, welcome. Good to have you with us. This has been a very good year by any standard, up more than 20% for the first 10 months of the year. It is one of the best election years since the 1950s. Does good performance tend to beget good performance either for the remainder of this year or into next?
Yeah, well, first, Tyler and Kelly, always great to be with you. And just looking as a starting point to your question around the data, typically when you have a strong first 10 months and we're over 15% in any year, the final 2 months of the year, you are up 95% of the time, 19 out of 20 times. So the history is on your side. And then also, let's say if we just look at election years themselves, you're typically up about 78% of the time with an average gain of about 3%. That's just starting point. I think Warren Buffett said if all you needed was history, the richest people would be librarians. But I think the main thing that you take from that is that a market that or a trend in motion tends to continue. And even if we get some of this volatility around the election and then some of the other major events next week, the primary trend in our work is still pointing higher over time.
So history says one thing. What could screw it up?
Well, what could screw it up? I would say, using history as a guide, normally you have a little bit of a pre-election pullback, and you haven't seen that. So what normally happens is you have that pre-election pullback. It's overdone because it's based on anxiety. And then once you get past the election, whoever wins, the market tends to have a sigh of relief. Well, this time you've never had that dip to kind of rebound from. So I think that could screw it up. I think there's just been, so close of a race that investors are almost not, even though there's so much talk about it, investors have been looking through it. So when you actually get some details of what's going to happen, I think that can maybe have a jolt of volatility. But all in all, Tyler, I still think the more important thing is the direction of the economy, the direction of earnings. In our work, that's still positive. But again, you might have a jolt of volatility over the next week or two.
We've been bucking some trends here in the last couple of months, Keith. First of all, September wasn't negative for the first time in like 5 years, and we had plenty of pretty bad ones before that. Then October, it's always supposed to be markets are weak going into an election. Instead, they were pretty strong, notwithstanding the way we finished there. You're a little bit worried about kind of a buy the rumor, sell the fact outcome come Tuesday?
Yeah, well, that's on a very short-term basis. I think that is, you're at all-time highs, a little bit of optimism. So I think that could be it. But for our investor base, we're not looking for the next week or two. We're investing typically for many years, but our tactical time frame is typically 6 months to 36 months. So the way we're looking at it is, I still want to stick with the primary trend, which we think is higher. If we get a pullback on the other side of that, and we think it's just because of some of the uncertainty around the election outcome, we would use that as an opportunity. Because our work strongly suggests that elections matter, but other factors tend to matter more in aggregate. And again, the underlying foundation of earnings in the economy is still in our favor.